So what the heck is going to happen with rates this year? You've been wondering, I bet. But you're going to find out right here on the National Real Estate Cafe with Don Gatling and Gino Franti. And you can find out, actually, just get these sent right to your phone. That's the smartest way to do it, by texting NREC to the number 58885. It goes right to your phone. You'll be in the know. Share with your friends. Share with your clients.
Subscribe to our YouTube channel, please.
Yeah, that's it. We're trying to build this and grow so we can add more value to you. So what's going to happen with the rates? We'll flip to the screen here. And again, we keep informing you what's going on. Rates did jump almost 0.75% higher than they are today. We've had a little reprieve.
All right. So
And
does that mean
others
that's it? They're going back down to the threes, right, Don?
Never. Damn. At least unless
Well,
there's
hopefully
something,
not.
Yeah. And just so you know, if you ever see it go back to the threes, run for the hills. That means we're all losing our jobs. That's the only reason it goes into the threes. So, but it has had a little reprieve. So, what's nice is the Fed's finally checking themselves, because they're all about, we're going to raise, and now they're slowing down.
They're saying they're going to be patient. That's
Yes.
the word they're using. Now, let me tell you something. Remember, we talk about this all the time. These are not mortgage interest rates. These are short-term interest rates, which have an influence on long-term interest rates. What I would be more concerned of is, when are interest rates going to rise? Well, when the government is not shut down. That removes some uncertainty from the market.
True.
When China decides what they're going to do with their fiscal stimulus program, that's going to remove some situations from the market.
Some trade war thing.
That trade war thing, which is, that's kind of
Between
hovering.
China and the U.S. Yep.
Yeah. So this wall
Brexit,
thing, and the Brexit thing.
So there's
Rates should be in the threes with all that crap going on, Don.
No. We have jobs. It's in the threes when we basically need all the help we can get.
I'm just saying, considering all of the uncertainty there is in the world today, rates are actually pretty elevated.
Right.
So as you start eliminating those pieces of uncertainty, rates will go back up that 0.75% reprieve that we have, probably in the first quarter, maybe the second quarter. So by the middle of the year, we should be right back into the low fives.
All right, so we'll go back to the screen real quick, give you these are some of the economists. Chief economist Doug Duncan basically feels that the economy growth in 2020 will likely turn out to be one of the strongest and will be more controlled basically through 2019. How much? We'll go to the bottom here. I remember having the numbers here. So economic growth is projected to slow to 2.2% in 2019, down from last year's 3.1%, while consumer spending growth is set to slow to 2.3% because that's a large portion of our GDP.
Yep.
And so basically, it's just going to mellow. That's good. That's consistent. That's growth.
This is crazy, but the Fed might actually be able to navigate a soft landing.
Only after a lot of screaming and yelling from all of us, and even including the president.
Yeah, everybody was saying, stop, and they're like, okay, maybe.
Yeah. So thank goodness rates should stabilize. So the good news is we were looking like it was getting ugly. Got up to into the fives. I know you feel that's ugly, but it's not
Still fantastic.
But it's back in the mid fours around there. So that's good news. Jump on it while it's there, because it could turn that quick. We've seen it. Remember, it went from 4.5 to 4 3/4 to 5 1/4, literally in 2 weeks.
Yeah, especially if you have a jumbo loan. Jumbo pricing is fantastic right now.
Oh my goodness. So jump in while the getting's good and find out more by going to johnandgino.com.